Good afternoon, ladies and gentlemen. This is Barry Norman on behalf of ETX, and welcome to our class on upcoming economic events. Now, for those of you that join us on a regular basis, you know ETX is a regulated provider, so I'm therefore required to give you a risk warning. So let me read that and get it out of the way. Trading in the financial markets can result in the loss of the amount invested. Do not trade with funds that you cannot afford to lose, and seek advice if you do not understand the risks. All information is provided in this webinar for educational purposes only. ETX Capital and the presenter are not financial or investment advisors and do not recommend any securities or instruments of any kind. Any securities or instruments that are mentioned throughout are for educational purposes only. And for those of you that are joining us through an internet promotion, don't know much about ETX, we are a fast-growing financial services company based in London. We are regulated by the FCA, the Financial Conduct Authority, and we're also a member firm of the London Stock Exchange. When you trade with ETX, you have many options. If you're a novice trader, you might want to start out on the ETX binary options platform, where you're simply predicting whether an asset will move up or down in a given time frame, and your risk is only the amount you type into the screen. When you're trading binary options, there's no leverage and no margin, and you're simply predicting whether an asset will move up or down. It's a great way to familiarize yourself with how the markets operate before you move over to higher risk trading environments. Like you can use our ETX Trader Pro platform, which is our internet-based platform, to trade CFDs, Forex, and commodities, and now the all-new Bitcoin. You have lots of options when you're trading with our ETX Pro. And then lastly, if you want the most professional environment, you can download our MT4 platform, which will allow you to completely automate some of your trading. You set it up, decide how you want to automate it, and you can also attach to it expert advisors. So you decide how you want to trade, what you want to trade, and what environment you want to trade, and then just contact customer support, and they'll be glad to get you started on the right foot. Now, this week we have some broad range of webinars up on the schedule for you. Today, as you can see, we have upcoming economic events. On the 4th, that's tomorrow, we have a 2-hour special on trading a trend flow strategy. Then on Wednesday, Tuesday, let's back it up. On Tuesday, we have the live market analysis with what's moving in the markets. And then on Wednesday, I'm doing a class on trading with MACD, moving average convergence and divergence. Now, moving into this week, we have an odd week only because the first of the month actually started this past week, but it was at the very end of the week. So the big event of the month, which is always the non-farm payroll report, will be this coming Friday. And we're fully entrenched in holiday season. And during the holiday season, market volatility is at a low. You have many traders who are moving out of the market while they're getting ready for the holiday season. A lot of brokers and hedge funds who are selling off their losers and getting ready for the new year and looking at tax and profits for the year. And lastly, you have lots of Forex and CFD traders who are getting ready just to go out and party every night and then out shopping every day for holiday stuff and then getting ready for the holidays. And if you're from a different part of the world that you don't, that seasons it, that this is not the Christmas season for you, you have sometimes seasonal stuff going on, or we're moving into the New Year's events, and everybody celebrates the joyous part of this season, regardless of where you are, what you believe in. So we want to join you and wish you all a happy and healthy New Year in the coming year. Now, we can look at where our predictions are for this year, or for this month. We're pretty bullish on the pound. It's been recovering some of its losses from Brexit, and the weakness in the dollar has helped it climb up. We see it this week at about 135.37. The Japanese yen staying around the 112, 113 range. The Swiss franc at about 98. The Australian dollar staying right around that 75 level, which is exactly where the RBA would like it. The Kiwis trading at 68.38, a little on the low end, and we remain a little bit bearish on the Kiwi. The Canadian dollar is at 128.07 at the bottom end of its range, so we expect it to pop back up a little bit this week. We have Canadian jobs reports on Friday also. And the Euro GBP is trading at 88.56 mid-range, and we remain fairly bullish on the Euro. Now, on this week's calendar, we have a lot of secondary events and some big primary events. And you can see the calendar is full with all of the first of the month or the beginning of the month reports. A lot of data in from China this week. We have the RBA meeting this week. We have GDP out of Australia. We have the non-monetary policy meeting out of the UK. We have Eurozone meetings going on tomorrow. And then we start moving into the big events for the US. We have the Bank of Canada rate decision on Wednesday. We have the ADP employment report, which is a precursor for the Friday non-farm payroll report. On Thursday, we get more Australian data. And then we go into Friday, which, as you can see, is a very, lost my pager, a very, very busy day. Lots of data out of China, which will keep the markets jumping early in the morning. We're also looking at the U.S. government shutdown limit. We expect something to happen before Friday. We have the U.S. government tax bill that was passed on Friday, but that doesn't mean it's finished because now the Congress and Senate have to start their debate to get their two bills where they want. We have the U.S. investigation on Russia pushing Mr. Trump around, and we then have the government shutdown coming up. So we have some exciting stuff coming out of the U.S. China, we'll be looking at exports and imports and trade balance, which could rock the markets. And then we got some serious data in the early afternoon or the early morning from the UK. We have industrial production and manufacturing production. And then we go into U.S. non-farms payroll report, which is the highlight of every month. And that's the non-farms payroll report at 1:30 GMT time on Friday. So last week, the U.S. dollar traded poorly through the month end. Overall, it has slipped a little further into the end of the week last week, and signs that the Senate Republicans were struggling to agree on a tax overhaul. Even though we finally got it Friday night, doubt if it's going to send the markets up any which. Everything has been negotiated away, and we still have to wait for now to see if the Senate and Congress can agree. It's like the upper house and the lower house of Parliament. They both passed something, but they're very different things they passed. They now have to see if they can find ways that they can agree on the bill before it can get sent off to Trump. So we sit there with that. So the stock market, even though it pumped up a little bit on Friday, is trading at 24,000 level in the U.S., which is a record high. It's more because of the weak dollar and just overall good sentiment. GDP came in for the U.S. last week, very, very strong. So we're showing strong growth out of the U.S. Now, the Eurozone economies are growing at a robust rate in 2017 also. Unemployment is falling and even core inflation is finally rising. So this helps support Mario Draghi. The ECB will have bond buys to 30 billion euros from January 18th. So they're cutting back their QA, looking at market normalization. Now, however, it left the door open to extending the QE program beyond September. And this hurt the euro a little bit, but the euro is still trading at a good number compared to where it was a couple of weeks ago. A weaker euro makes exports more attractive and pushes imported inflation higher. Draghi is happy with growth, but still worried about inflation. The political uncertainty in Germany is becoming an issue after an inconclusive election in September. A fresh round of elections joined the crisis in Catalonia and the political instability in Italy. In America, hopes of fiscal stimulus faded early in the year, but are now on the rise again with Trump's tax plan, because a lot are looking at this tax plan as a fiscal stimulus. The Federal Reserve has maintained its plan for 3 rate hikes in 2017 despite its lower U.S. inflation, which means we should get a rate hike at this month's meeting right at the end of the month. They've done that for the last 2 years consecutively, giving us a rate hike at the very end of the year. In the UK, again, we have Purchasing Managers Index PMIs, and the big job will be this week the rate decision out of Bank of Canada and the non-farms payroll report are expected to be weaker than last month, although crucially, hourly wages may pick up. And hourly wages and hours worked are the two important things we want to look at. The U.S.'s unemployment is very, very low. That means we have, in the U.S., most people are back to work. We need to see that the amount of hours are working up and they're getting higher wages. So that's becoming the crucial numbers we want to look at. On the corporate calendar, earnings have wound down again, although we do have DS Smith, which is a new entrant to the FTSE 100, and Home Builder Berkeley Group. So the focus on this sector will continue, but we shouldn't see much activity in any of the European exchanges this week. So as you can see, we don't have much on the calendar in Europe. Ryanair, EasyJet, IAG, nothing that will spike the markets one way or another, but we will be watching what's going on with Theresa May and Brexit and politics. That could have some stuff going on for us. So let's go day by day and start looking at the events that might offer us trading scenarios. Monday, early in the morning, we have Japan's consumer confidence. That would have an effect on the Nikkei and the yen. The yen crossed the yen pound, the yen dollar, the yen euro. And then we have UK construction PMI. This is a big one to watch out for the pound and maybe the FTSE. But watch the pound and its crosses. We need construction PMI to do better. We're expected to rise above the 51 level. Remember, PMIs, anything over 50 means expansion, but we need to get this back up. Earlier in the year, it was soaring at 53, 54, 55. So on Monday, we also have the Eurogroup's meeting. The group of the Eurozone finance ministers will convene to discuss recent matters, progress in Greece's program, political uncertainty in Germany, Italy, and still in Spain, and Brexit are all on the agenda. So we don't know what headlines might be coming out of the meeting, or if any. In addition, the ambitious French plans to bring the Eurozone together will also be floated around, but any progress will be hard to achieve until there's a new government in Berlin. So we got to keep an eye on what is going on with our dear friend Angela Merkel. Now we do get Spanish unemployment in the morning. We don't know what's going on out of Spain ever since this mess with Catalonia. We don't know how it's affecting the numbers. So we'll keep an eye out of Spain, but it won't have a big effect on the euro. Tuesday, we get some important events early in the morning if you want to be up that early. We're going to get the KZN, which used to be the HSBC Services PMI. It's an important number out of China, but we're more concerned with manufacturing than services. But services are important. We're expecting to fall a wee little bit to 54.1 from 54.6. But remember, 50 is the important number. So 54 is a great category. It might have an overflow effect if it's a bad data or a very strong number on the Australian dollar and New Zealand dollar. So keep an eye over there. Then at 9:30, we get the second part of the PMI data at the UK, which is services, which is an important number because it includes financial services. And we're expected to rise to 55.9. It'd be nice to see it hit 60. If we saw it hit 60, the pound will probably rally. Then in the afternoon, we have U.S. trade balance out of the U.S., which could have a small effect on the S&P and the U.S. dollar. And then we have U.S. ISM non-manufacturing PMI. Now, it's a good number. We're expecting it to dip down. We're in wintertime, but it's still 59.3 and still a very good number. But we can also start gleaming from this if we look at the section under employment. And if this is a good number and non-manufacturing is hiring, it might help Friday's data or give us a look into what we can expect Friday at the NFP report. So Tuesday we have the Australian rate decision. The Reserve Bank of Australia has not changed its interest rate since last cutting it to 1.5. That's over a year ago. And we don't expect any change at this point. And the ISM non-manufacturing is Tuesday at 1500 GMT. The service sector report is part of the build-up towards the non-farm payroll report on Friday. In October, the score hit 60.1, a very high level, which reflects robust growth. The figure in November is projected to be slightly lower at 59.2. Becoming higher than 59.2, we should see the dollar bounce. We also continue having services PMI from all the individual countries out of the Eurozone. Again, Germany is the only big number we watch. And then, of course, the UK is separate from that. And we also get Eurozone retail sales. We'll keep an eye on that, but now that we're in the middle of holiday season, major shopping season with Black Friday and Cyber Monday behind us that won't be out until next month's data. So we'll keep an eye over there. On Wednesday, we get more Australian data. Aussies will be very busy. We get growth GDP out of Australia. We're expecting a rise to 2%. That will be very nice, with a quarter-over-quarter drop to 0.6. It should help the Aussie. We might see the Aussie trading near the 76 range if it's a good number. Then on Wednesday afternoon, we get the ADP payroll data. Now, it hasn't been right on in the last few months. Remember, ADP is a private payroll company that gives us data based on an algorithm that is supposed to tie us into Friday's government report. But remember, ADP only has the data of those people who use its services. And they are the largest payroll company in the US, but they don't service the military, they don't service many farms, and they don't service big corporations. Big corporations have their own in-house payroll departments. So they use the data gleaned from small to medium companies and try to use it to predict what's happening overall. So we use this as a precursor, but it's not as reactionary as it once was. Then we have in the afternoon the Bank of Canada rate decision. We're not expecting any policy change, but we might listen to what the governor has to say, where he thinks the Canadian dollar is, because we've been watching them to have a rate increase. And then in the afternoon, we have the weekly inventory report, which could give us a bounce to crude oil. We have Russia and OPEC negotiating before the meeting this month to determine if they're going to all keep down their quotas. So we'll see what happens, but it's probably going to be more on headlines than it's going to be on actual U.S. inventory. So remember, we have Australian GDP, the U.S. ADP non-farm payroll report, and the Canadian rate decision, all on that Wednesday calendar. Thursday, we gear up for Eurozone GDP. Now again, when we look at Eurozone, it could be higher or lower. We're going to focus in on German GDP. If the German GDP is a good solid number, we should see the euro jump. We're expecting it to be between 0.6 and 0.7%, with an annual at 2.5 rising from 2.3. It could have a small effect on the DAX, the CAC, the FTSE, but very, very little, unless it's a big miss. If it's a good German number, we might see the euro bounce upward. Then at 1:30, we get the U.S. jobless data, which nobody will pay much attention to with Friday's big unemployment report. But jobless data has been very good in the U.S. 3 o'clock, we get Canadian IBPMI. If you're trading the CAD, it might give you some opportunity, but it's going to have a little bit, very few people trade the CAD, the loonie. And then late at night, which is really Friday morning, we get Japanese GDP, which could give you an opening to trade the yen pound, yen euro, yen dollar. If you're up that time of morning or want to see what it is ahead of time and put a limit order in or a time specific order in or do some hedging, it could open opportunity. Now also on Thursday, Mario Draghi is going to have a speech. The president of the ECB will hold a press conference in front of the Bank of International Settlements. This comes 1 week before this ECB makes its decision and also publishes its new forecast. Draghi may react to the upbeat growth data, but also to the latest disappointment in inflation data. He usually moves the dollar, and he's going to be telegraphing to the markets what they can expect the following week, so there isn't any craziness the following week. And again, Japanese GDP. Revisions to Jan's GDP can be quite significant. The initial report of Q3 showed a worse than expected growth rate of 0.3%. If growth is concerned, it will complete a 7 consecutive quarters of growth, the longest streak in a decade. An upgrade to 0.4 on a quarterly basis is in the cards. That could give a rally to the Japanese yen. So again, it could give you an opportunity to trade, especially if you know how to use order entries. An OCO might be the right way. Set it up the night before and have it in ready to trade. Then on Friday, we have a very busy day. We start out early in the morning with Chinese trade balance. We go to German trade balance. Then we go to UK trade balance, industrial and manufacturing production. And then the U.S. non-farm payroll report and the U.S. Michigan consumer confidence report, which is the big consumer confidence out of the U.S. So Friday, we're going to see in the early morning European time, we're going to get German CPI. That's inflation data. The initial read on Germany's inflation showed no change in prices. This will probably be confirmed from now. If we see a bounce back up, it will probably give Mr. Draghi a more hawkish outlook. We also have French industrial production and more of the small Eurozone countries giving Eurozone industrial production, not enough to change the euro. But then we come to U.S. time. We have the U.S. non-farm payroll at 13:30 GMT time. Now, the U.S. economy gained no less than 261,000 jobs in October. A compensation for the hurricane-skewed job growth in September of just 18,000 jobs. The report for November will likely be more in line with the average, around 200,000 jobs. Exactly 200 is what we're predicting. Wages badly disappointed in October with a 0.0% month over month and a 2.4 year over year. So we're looking for wages to increase. Like I said, lots of people are back in the market employed, but they're employed at under wage value. Some are employed underneath what they were making before. And we need wages, we need salary to increase to help promote the overall economic cycle. So the unemployment rate dropped in the U.S. to 4.1. It's an extremely low level, as well as a low participation rate. No changes are expected here. Now, if we see unemployment pop up to 4.2, it won't make any market significance because sometimes it's just a statistics number for 1 month, and that's most likely what's going to happen. Now, this is the last NFP before the Fed decision in December, in which Yellen is expected to complete the 3 hikes for 2017. The only thing that could derail her rate increase would be a god-awful report. And we don't see that in the cards, especially with GDP beating expectations, all the economic data we've seen this month. Again, if you want to look at the ADP report and the ISM, manufacturing, non-manufacturing, to give you some clues, that will help you figure it out. Later in the afternoon, we have U.S. consumer confidence. Now, this is the big one for the U.S., the University of Michigan Consumer Confidence Report. Now, it comes right on the back of the U.S. jobs report, so it's hard to predict what to expect because we might still see volatility coming from the initial jobs report. But we're still expecting it to be a good report, and basically consumers are very happy in the U.S. as long as oil prices remain low. And now that we got the tax increase fairly, or the headlines fairly passed, we might see some positive energy. We've seen positive energy going into the November holiday season time, which is forecast to have broken all online records, especially for online sales. And it seems to be, we're predicting a very good Christmas shopping period. So it seems to be consumer confidence is at its peak. Now, the biggest asset out there we know is the euro-US dollar. So for the first full week of December, it will be a quiet one for the Eurozone releases. Now remember, because of the holiday season, volatility will be lighter. Trading will start thinning out each day as we move towards the holiday season. Don't forget, it's not because anything happened, but more people are going out to holiday parties, more company-sponsored holiday parties. People are closing their accounts. People are out Christmas shopping, holiday shopping, preparing for vacation times, preparing for so they're less trading in the markets. Doesn't mean hedge funds are going away, but the big hedge funds are looking to where they can book profits so that they can show a good 2017, where they can take advantage of tax and tax losses and close out. They'll actually close out a lot of positions just to reopen them after the 1st. So just be a little careful in the next couple of weeks. In the U.S., the calendar, we focus on jobs data with the release of the ADP unemployment claims and the non-farm payroll report. Employment data is expected to remain strong and lead the way to the Fed meeting, where it's expected that we will announce their 3rd rate hike. So we can see what the euro dollar's gone a little bit in the beginning of November. The dollar had some strong momentum, but it's lost that. The eurozone, the euro's been able to pick up. It's trading just below the 120 level. We don't see it hitting 120 this week. We expect it to stay somewhere right around where it is, about the 119.5 level. So that's all that we can expect out of the euro. Like I said, even if we get a good Federal Reserve number, I don't think it's going to rally the dollar. But we can take a look, because we had the tax passage on Friday, and moving into ADP, we might get a rally in the dollar. I don't know. We might get a small rally in the S&P and the Dow, although they bounced back on Friday. We don't, we can see, but I don't think we're going to see much volatility there. So the euro struggled to continue advancing as the dollar found its footing. The upcoming week features a constant stream of data, including PMIs out of the eurozone, industrial output, and more. So we've already taken a look at the euro, what's on the calendar. Now, inflation fell below expectations for the second month in a row. And this is what is a major weight on Mr. Draghi's shoulders. The good news comes from the surprise drop in unemployment to 8.8%. That's a good gain for the eurozone, which was heading, it was at 12 at one point. Now, we're waiting for what's going to happen in Germany on the political side. U.S., like I said, has been doing very well on home sales. We're expecting confirmation hearings from Mr. Powell. Don't think anything's going to happen there. We just think he's going to get pushed through. And Yellen has remained fairly optimistic this will be her last major meeting before she steps down and Mr. Powell steps in. So we can keep an eye over there. Now, for those guys here that are, based in the UK, because we are a UK company, the pound has been trading at 134.70, which is a good number on the back of a softer Brexit optimism. The upward weekly movement has not been one direction. The pound is weaker on Friday as the European Union went on record and stated that if Ireland cannot accept the UK's offer for its border, then trade negotiations with the single market will not move to the next stage. We had Scotland pushing their stuff, Ireland pushing it. I wouldn't want to be in Theresa May's shoes. The deadline for the border proposal is Monday, and faced with the solidity of the Eurozone, Ireland holds the fate of the UK in its hands. The Irish border became a show-stopping issue after the disastrous snap elections results forced May to partner with the Northern Irish Democratic Union. That was the biggest mistake she could have ever made, was that snap election. She was so sure she was going to win it and be, just giving her time now. She should have either bypassed, or she should have worked much harder to win that election with substantial numbers. So we can see the pound has been steadily pulling back up. Almost looks like the euro trading line, because a lot of it is on the overall weakness of the dollar. But again, we have some events. We have all those UK PMIs, which will be a big factor this week. Give you some trading opportunity, especially construction and services. And we also want to watch the UK trade balance and the headlines on Brexit. And that's a wrap up for this week and what we expect on the economics calendar. We'll give you some guidelines. Next month next 2 months, in January and February, we have entirely new course selections coming up for you. We have 12 new classes on the calendar, so watch them. We'll be posting them shortly. But we have all new education classes coming up for you. We'll be doing a lot more work directly on the ETX Trader Pro platform. We'll also be looking at trading Bitcoin directly on the Trader Pro platform. Don't forget, ETX has added Bitcoin to their offerings, so now you can get involved in the cryptocurrencies. And if you're not sure how or what, make sure you come to our class on cryptocurrency. We moved it earlier this month. We just changed it on the calendar. I believe it is next week, not this week, but next week. So thank you very much for joining us. Have a great holiday season and a great, happy, healthy New Year, no matter what you celebrate or how you celebrate. It's a festive season of the year, and just enjoy it, and let's go into 2018 on a profitable note. And once again, thank you for supporting ETX, and have a great week now. Bye.